Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive strategy optimization and marketing performance to succeed on Amazon. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month after month. Check out disruptiveadvertising.com to learn more. Our guest today is Tyler Jefcoat, CEO of Seller Accountant, an accounting firm focused on helping out e-commerce sellers drive profitable results by taking their bookkeeping headaches away. Prior to this, Tyler co-founded and sold a healthcare company that grew to 100 employees in 4 years. And he has also been a banker and a Red Cross instructor. Tyler, welcome and thank you for joining us today on the BuyBox Experts podcast.
Thanks, James. Glad to be here.
Let's start by talking about cash flow, because where can an Amazon seller be without cash flow? What recommendations do you have for brands dealing with shifting customer demand, potentially unused overhead, labor challenges, and all the likes caused by the COVID situation we're all faced with today?
Yeah, so COVID has created a great opportunity for our space, right? James, you and I have never been busier because our brands are thriving in the ecosystem. The market is rewarding nimble e-commerce, direct-to-consumer brands right now. And so grateful to be in the space. But I think, the beginning of your question was about cash flow. The number one constraint on our customers' ability to get from where they are to where they want to scale to is capital. Do I have enough working capital in my business? And so they're handicapped. They see that it's not just a normal Amazon year over year, 30% growth. Wow, we're going to ride the wave. This is that on steroids because of the fact that all of a sudden grandma's buying on Amazon or going to a direct consumer website. And so understanding where your cash is, you mentioned 3 or 4 anecdotes in there where it might be stuck in some unuseful areas like overhead, and how to deploy that cash well so that you don't run out of inventory is just critical.
In Q4, we see bottlenecks in Amazon's ability to handle inbound FBA inventory as well as outbound FBA shipments. Some sellers are starting to invest in support to do merchant fulfilled orders. I'm curious, from an accounting perspective, do you think about FBA orders and merchant fulfilled orders in different ways? And should sellers be prepared to do something different in their accounting to deal with the differences between those two types of fulfillment options?
Yeah, I think from an accounting standpoint, FBA, you may hate Amazon's API for lots of different reasons, but it's actually really, really good inventory data. And so the biggest accounting challenge once you do anything that isn't called FBA is that you have to keep up with it. Like every element of your logistics operation, and therefore the accounting for that operation, has to get more sophisticated. You have to have some way to track how many pallets and units are on the shelves of your warehouse or the 3PL partner that you've selected. And so I guess that's the anecdote. The anecdote is just get ready, right? I mean, I think the Amazon world, especially after what we saw in the beginning of the year with just increases in lead times, and now we're in Q4, it's happening again. If you want to scale, you need to have a logistics operation that's more sophisticated than order from China, go straight to FBA. But if you're going to do that, be ready, because that comes with a lot of headache. Now I've got to manage a lot more. And so I think that's the biggest thing for us is you just need to have the system in place to be able to capture that new inventory data so that you're not left with a huge gap in your understanding about where my stuff is.
Talk to me about situations where you have clients that have come to you that say, now we have this merchant fulfilled capability. What are some of the typical challenges that you face in monitoring what's going on around them now being able to support you with the necessary data?
Yeah, so very few of our customers come to us with a really nicely put together start to finish ERP, or, like you kind of think about this like theoretical great online system, and there's some good tools out there. I'm not saying there aren't, but most sellers that are kind of in the sub $20 million range, which are a lot of our clients, struggle with that. And so the core questions that we end up having for them they're kind of operational questions. Does your team know how to receive inventory? It's like, do you have some kind of repository, a spreadsheet or something where you're grabbing an order when it comes in, and you could answer the question at the end of a given month, how much stuff do I have? Right. I mean, those are kind of the two core questions. Operationally, the core question is how much stuff do I have? Because I need to make sure I don't stock out and I can sell it. Financially, I need to know how much I owe for that stuff and when I owe it. And so the data sets just get more complex. And so it just goes back to, all right, let's flow chart the operation first. How do you order stuff? How do you receive it? When do you pay for it? And then let's build some kind of a process to capture that so that you could, with some fidelity, answer that question: where's my stuff and how much is it worth? That kind of thing.
So let's talk a little bit more about where's my stuff. It would seem to be common sense that firms would know how much money they're making. And yet, when I think of the 13 or 14 years I've spent working with online sellers, many of them don't have accurate, timely data to track their financial performance. Even companies doing $10, $15 million a year. Without scaring sellers, tell me, how do you encourage prospective clients to make the investment in proper accounting? And what does such accounting do to improve their ability to make even more money?
I was shocked when I got into this industry to learn that the hardest question for most of our brand owners to answer is, did I make money last month? That is a surprisingly, shockingly difficult question to answer. Yeah. And it's so important. And so, in a world where you have access to real-time data from Shopify and Amazon, you can't afford to wait on your accounting system to give you all the good news and bad news. You have to have a dashboard that's giving you more real-time data. I'm not going to wait on cash. At the same time, it's never been more important for your accounting system to validate those assumptions, because whatever dashboarding tool you're going to use, like think about it, I'm going to decide whether to increase ad spend or decrease it today, or whether to get more aggressive or less aggressive on one product versus another, whether to do a coupon. I'm going to use a set of assumptions to make those tactical day-by-day decisions. And I need to be able to now compare those assumptions to actual validated financials. In other words, a real accounting system that has counted every dollar, so that I can learn as quickly as possible whether I'm using the right decision matrix. I don't know, that's a complicated way of saying I got to make really quick battlefield decisions, but I've got to have that kind of overhead surveillance, the real accounting system that shows me if my tactical decisions are pointing in the right direction or they're not. And so for that reason, it is absolutely crucial to not just have financials, not just have them be up to date, but have them be accrual, which means I'm matching the sales data with the costing data every single month, and just as importantly, the advertising data, so that I can really answer the question, did I make money last month?
So if we think of a seller's catalog as being a whole series of different groups of to use your war example, different platoons that you have,
right?
Individual P&Ls at the SKU level is in many ways almost a pipe dream for sellers. If they haven't been doing proper account level accounting to then disaggregate information down to the individual SKU level, they're making decisions about advertising or promotions or coupons at the SKU level. How do you help companies go from account level visibility down to the individual SKU level so that they can rationalize, should I be investing more on this SKU versus that SKU?
Yeah, so I think you're talking about the macro and the micro are both really important. And as an entrepreneur, most entrepreneurs that I know, and I would put myself into this category, tend to have kind of the rosiest possible view of how things will go for a particular product line or business idea. And so we need objective truth to measure our assumptions against. And we need to understand our portfolios on a portfolio macro level, which is why you have to have a profit and loss statement that captures your entire sales by sales channel, that it captures your actual cost of goods sold and your actual macro advertising dollars, so that you can see, like, for instance, here'd be a great example. If I've run a bunch of SKU level analyses and they show really profitable, really profitable, really profitable. But then I look at the macro picture of my P&L and it's like not profitable. Then I know that there's something seriously wrong about the way I'm measuring the profitability for each product. And so again, it kind of goes back to that. You got to do both. It is not realistic. At least I haven't found a tool so far that is automatically going to give you a really great SKU by SKU P&L, because you've got a source of truth in terms of advertising data, which is normally your sales channel, and you have a source of truth for your costing data, which is normally some completely other system, as we talked about earlier, that a lot of people don't even have that system. And so you got to have the macro, and then you still need to do the work at least quarterly to do a SKU level profitability analysis to answer the question, how much can I afford to spend advertising SKU A to get it to move and still be happy with the profitability? And how does that profitability fit into my strategy? Am I selling a consumable where I can afford to take a short-term loss? If I'm not, I need to make money. I'm not Amazon. I don't get to spend 15 years building positive cash flow. I got to make money in the business, and I need to do it quickly.
So talk to me about what are some of the e-commerce accounting essentials that every third-party seller should have in place today. And let's move beyond the obvious stuff. I'm curious more about things that, hey, I got an accountant, I got a bookkeeper, and yet there's reports that come out of Amazon that people may not be looking at. What are some of your thoughts there around get the basics in place, but here are some things that you may not have a visibility on that you should be focused on?
Yeah. So the price of admission things, you want to be compliant. You want to have a real P&L. You want to not have commingled personal expenses. Like, let's throw that aside. Everyone's going to be doing that. Yeah. I think when you're looking at all the rich data that you can get out of Amazon, I'm a big fan. I like kind of playing with the fee preview report every once in a while. That's one of the reports that can help me kind of build a poor man's unit economics analysis for each of the ASINs for our clients. So that's within the fulfillment report. It's called the fee preview. Another one that I really like is some of the ending inventory, the monthly inventory report that comes out of fulfillment. That tends to be pretty good data that Amazon, I think they release it on the 5th of each month. It's going to say, hey, at the end of December, here are the actual units you had within our fulfillment network all over the place. I like keeping an eye on the business reports because it gives me it's not anecdotal information, it's real financial information. But what the seller has to remember is that business reporting section of Amazon, those are not settled sales. And so this is another phenomenon we saw back in April, James, is a lot of customers pulled the trigger in April, but because of those delays in FBA outbound shipping, the client didn't actually get the product until May. But some of those clients got fed up and canceled the order. And so you can get a false positive. If you look at the business report for a date range, it doesn't capture that undoing of the sale if somebody were to go back and cancel it. And so at the end of the day, that settlement payment kind of flat file, that unified detailed transaction report has to be gospel. That's the report within Amazon Seller Central that I should be able to, as a guy who does assessments for your values, I should be able to pull your unified transaction report and to the penny validate your P&L, at least in terms of sales, refunds, and FBA fees.
So let's talk about some of the shifting consumer preferences that happened while we've all been in lockdown. Consumers are changing the way they allocate various parts of their wallet and moving disproportionate dollars to online channels. So talk to me about what are some of the short-term changes that you've seen your clients have to make in order to deal with these changing consumer preferences?
And this is not just like eating more ice cream because we're stuck at home, like not that kind of thing, but just
preferably not.
No, so
I got in accounting shape. Tell me about getting into accounting shape during.
There we go. Yeah, it's not the Peloton. The answer to this one is actually not Peloton. It's weird. You probably thought it was, but yeah. So I think the ball is moving very, very quickly right now. The macro is that everyone's moving to e-commerce. It's a great time to be in commerce, in the e-commerce space, but the need to make good decisions quickly has actually never been where it is right now because of the sophistication of the aggregator pool of buyers coming into to play in our sandbox. Yep. We as third-party sellers are having to understand and make decisions based on our data more quickly and more precisely than we ever have before. And we're doing it in a market where we're growing more quickly than we ever have and are having to respond to customer demand more quickly. And so it all points back to, okay, this is a cool wave. We're on it. We're pumped to be here. We need to have control over our businesses. We need to understand, and obviously from the accountant boy speak here, I need to know where my money is so that I can make good decisions to allow me to raise cash and to allow me to generate maximum profitability and therefore enterprise value.
As brands and sellers have seen their sales take off during COVID, being able to afford growth is often pretty challenging. And so any redacted stories you can tell me around situations where clients had to get their act together, had to start to rationalize what they were doing so that they could get out of bad parts of their business and get back into better parts of the business so they had cash to help drive the growth where it made most sense.
Yeah, I'll give you the sad story and the happy story. So in the sad story, client that had 1.2 million in EBITDA of operating profit in 2019, and they had a new gigantic product line that was going to be perfect for the pandemic as the spring hit. They didn't have any money on their balance sheet, meaning there's no cash in the business, and they didn't have an intelligent way to fund their POs. And so they, instead of having a bunch of $1 million months in sales, they were really hamstrung to the point of almost being bankrupt. They survived. They're going to be fine. But that was poor cash planning. They didn't have the substance to help them get to the finish line the way they wanted to get. And the happy side of it is we've had clients that have either been able to leverage the really nice SBA programs that came out here in the spring. That's kind of been a lifeline for clients that are looking to right their balance sheet. I want to get better debt or have more funding. That coupled with the fact that I think there are just more investment and debt partners on the market available to our clients now. I've seen lots of them. Do you know what? Actually, one of the best things that happened was Amazon kind of having a crummy April. I mean, things were so bad from the logistics standpoint in April that we were able to coach almost all of our clients in, say, July to say, we need to get ahead of this thing for Q4. We need to be prepared. Let's go ahead and secure our funding in June, July. Let's go ahead and make sure that we're a couple of weeks ahead in our supply chain so that we are not going to be the victims of what we know is going to happen, which is that Amazon's going to get crammed again. They're going to have supply chain issues. They're probably going to have COVID issues. Let's not choose to be a victim a second time because it would be our fault.
So I love the fact that, clients are using this opportunity as a learning experience. Even if you put COVID aside, there are still going to be some unresolved issues that you would like to see some of your brands work through when it comes to accounting and keeping track of their numbers. Share with me, what does accounting 201, 301 look like where you're trying to train your clients to do more and be more sophisticated with the numbers? They've got their macro view in place. Great, good. They can pay the appropriate amount of taxes. Talk to me about some of these unresolved issues and why are they that much harder to solve? Why do we need a professional like you to come in and help train clients on this kind of stuff?
Yeah, I think the frontier right now is measuring not just product profitability, but measuring the velocity of that product. So the answer to your question that is, what's the problem? The problem is that inventory data is really, really hard to work with. It's just a pain in the rear to deal with. The opportunity is for sellers who are developing new products to not just think, okay, this is a product that's going to leave me with a 30% post-advertising gross profit, but to think, can I turn this inventory twice a year or is it 4 times a year? In other words, my working capital, my dollar that I put into this inventory, am I taking it a step further to say, am I happier with the opportunity cost of choosing A over B or B over A, and not just thinking about profitability in its own vortex or vacuum, but thinking about cash velocity. So how quickly, and so I would call it an annualized return on inventory investment. If I have to spend $1 to secure a pen that's in my hand, how many times can I turn that dollar each year? And every time I turn it, how much profit do I make? And so it's a more robust definition of the profitability of an e-commerce brand than just saying, my account balance is going up, or, my P&L says I have a little bit of profit, but now I have $1 million in inventory on my balance sheet. So understanding both vectors is important.
What you're suggesting is that there may be situations where it makes sense to take a lower margin product that you can turn more often And that's okay, rather than saying, look, I make so much profit when I finally do sell this other product. Being able to make that kind of decision around where you're going to put the dollars, certainly that makes a lot of sense. Can you share a little bit with me in terms of, what are some of the unexpected opportunities that all these COVID-related changes and changes in customer preference have created, where your clients have been able to run in a direction very, very different than they expected because they've got good numbers in place, because they've done some of the legwork around looking at those numbers and figuring out how to make important but sometimes difficult decisions?
That's a good question. It's almost counterintuitive, but I think our best companies this year, James, have actually used the rising tide to stay focused. So it's almost like you would think the market is exploding. Let me launch 7 different sales channels or launch a bunch of new product lines. But that actually isn't what I've observed, both talking to the aggregators and talking to the sellers themselves that are making the most money right now, is they're actually saying, wait a minute, I'm going to use this as an opportunity to assume a de-risking of the Amazon marketplace in a sense that I don't feel like I need a shotgun approach. So approach 1 would be shotgun. I've made a little bit of money. Let me launch as many small things as I can. Approach 2 is let me double, triple down. And I think the pandemic has given some of the best brands out there the exhale to say, I can trust this market is stronger than it's ever been. Let me get good at it before I start solving new problems. And those are the guys that are killing it right now. Let me double, triple down on what's working, and do it at scale, and do it with sophistication, do it with data sets, more so than let's take these few extra dollars we've made and let's launch 7 different marketplaces or 7 different brands, that kind of thing.
So companies doing really well on Amazon, I'm going to give you a little bit different situation. Even well before lockdown, we at BuyBox Experts, we ran into a lot of brands that wanted to stay away from Amazon. And at no point did they have any interest in the channel. Well, by the time end of March rolled around, it became pretty apparent that's where consumers were shopping, at least here in the US. Given what we know about the process of getting onto Amazon and starting to use their data, what advice would you give to brands if they finally begrudgingly say, okay, it's time for me to have an active Amazon channel strategy? What advice would you give to them around starting to incorporate and learn about all that information that Amazon provides from a financial and accounting perspective?
Yeah, so there's 2 things that popped in my head when you said that. One is, I think if you're a legacy brand and you've continued to hold out, it's probably time to go ahead and get on Amazon and control your listings and control your brand. I don't think you can hold out too much longer. I don't think the fear of Amazon being the monster they are, I don't think that's enough of a fear. It is no longer a valid argument for not getting aggressive and intentional in the Amazon brand marketplace, because if you're not doing it, somebody else is. The second thing I would say is, the larger the company, we were talking to a publicly traded company here a few weeks ago that has actually done what I think is the right move, which is go ahead and set up a subsidiary LLC for your Amazon marketplace. They've been squeamish. They've been all 1P. They've been all vendor central. They want to launch a number of their very, very large portfolio into Amazon third party. And so 2 things they've done really well. One is to find someone like BuyBox Experts that knows what they're doing, right? You need to, if this is not your strength, if you're a manufacturer, find someone that understands the marketplace and double down there. And 2, you probably are going to set up a second set of books just for this little side entity. That's maybe something where Seller Accountant can help you, but it's all about, I'm going to need to learn a completely different business model, and I need to make sure I have maximum. I can't afford to let my Amazon business be a rounding error that I just, this is what a lot of large brands do. They'll just take those little deposits from Amazon and just book them. They're using a enterprise level NetSuite. I'm not worried about it. This is a tiny percentage of my total brand. That's not managing your brand. You're going to have to be more intentional to get the data set for the Amazon marketplace. And it's time to probably get aggressive on that.
Let's shift gears, Tyler. I want to talk with you. You've mentioned these aggregators a little bit. I want to talk about the rapid increase in interest among investors to buy FBA businesses. Private label brands on Amazon are becoming a hot commodity. What guidance would you give to those types of firms, many of whom may well be your clients today? What guidance do you give to them as they think about going down that path towards getting ready to sell their business to an investor like an aggregator?
Yes, I think the best counsel I'd give to a brand owner that's considering, because we're all getting phone calls now, right? I mean,
Yes.
it's a really interesting moment in the
Yep.
marketplace. It's just fascinating. As a finance guy, it's really interesting. One thing I would say is you don't have to sell. I think there are going to be some of the aggregator partners that are going to call you and say, take it or leave it, one-stop shopping, you've got 48 hours, whatever it might be.
Right.
I would be very slow to buy into that. I would not be inclined to sell with any kind of fear matrix happening in my head. There's no, I don't believe there's any trouble with the economics of your business model going forward. I would be very inclined to either get the number I want or hold tight. The second thing I've learned is if you are looking to get bought, again, get focused, get your financials in order where you can tell a clean, clear, believable story to those investors, and give yourself as much leverage as you can in that negotiation so you can get a price that makes you happy. So I think those are probably the two things. Is one, you don't need to be stressed out about this. It could allow you to accelerate your goals if you're looking to get out in the next couple of years. Have your ducks in a row, be organized, especially financially, and don't feel like a minority guy. I feel like you have some negotiating power in that room, because the successful, especially a brand that's reached 800,000 to $1 million to 2 million in profit each year, that coveted Amazon native brand is a hot commodity right now.
Yeah.
And I would be very slow to unload unless you're pretty happy with the deal.
I've been involved working on due diligence with some of these brands, and it amazes me that so many of these companies are literally building their business on 1 or 2, maybe 3 SKUs. That's fundamentally where the sales come from, is a very, very small number of products. From an accounting perspective, that makes life a little easier, but it's also really scary when you see the lack of diversification. A single channel, 2, 3 SKUs, that's your business. Tomorrow morning, earthquake happens, lightning crashes, there's no business left. And so the process of how do you take a business that does not have a lot of pylons? It's based, it's built on 1 or 2 little things that have done very well. How do you diversify risk from an accounting and financial perspective so that somebody says this is a fundamentally sound business where if I buy into this business, I don't have to worry every single moment that the thing's going to blow up?
Yeah, I would kind of view it in phases. So, the simple answer is you need to have a coherent strategy for your brand, and you need to constantly be moving toward that strategy. But the way I would view it kind of in phases is I have to find a profitable path to revenue. I'm going to be building. I might even encourage you to have just a handful of SKUs as you're starting. Test a few, keep even fewer, test a few more, keep even fewer. But to your point, I would love to have not 2 hero SKUs, but 20 solid SKUs, right?
Sure,
I would like to have a business where I don't have any one SKU that's more than 10% of my business. Now, depending on your brand, I'm also, and this is something I'm even hearing from the investors, if I have 2 fairly similar, let's call them $2 million deals, and one of them has, 700 variants and one of them has 25, you're going to get more brand value for the consolidated, simpler 25.
Sure.
But if you had a third option, it was a single SKU, again, your buyer pool just changes, because the kind of company that can buy a $2 million company with a single product and not radically have a huge risk factor would have to be one of these aggregators. So all of a sudden your buyer pool is really, really narrow. And so
Right.
I just think the bigger picture is, let's get on a whiteboard and decide, what is my brand strategy? What is the perfect blend of having the right variants, if I'm selling the gold, how do I sell the silver version of it? How do I make it to where I have a coordinated brand strategy? The other thing I'll mention, because we were talking about the aggregators a minute ago, is there is some benefit in having a problem set or a customer set that you address. So I think there was kind of some prevailing wisdom a few years ago is just throw products. If I'm private label, I'm just going to go, I'm going to sell cups, and I'm going to sell this, I'm going to sell camping gear, I'm going to sell shoes, I'm going to do everything.
Yep.
It's much more important now to make sure that your brand elements line up where you can point to a clear vision to the future, and just know that the marketplaces are rewarding that. The fact that I know how to address a 38-year-old mom of 3 that does this and my products align with her needs, is you almost have to start thinking like Procter & Gamble. Like, what are the consumer products companies doing strategically to make sure that their products are just have a coherent strategy? And so I think that's just getting more and more important. So, whether you have one SKU or 30 doesn't make a huge accounting difference. If you have 3,000, that's a real pain, right? But I think what's more important is, what is my strategy? Where do I want this thing to go? And if I only have 2 SKUs and I'm at $2 million a year in revenue, probably time to launch a few variants to try to see if I can diversify the risk a little bit. Yeah.
Right. So during my introduction of you, I talked about some of the different types of life experiences you've had prior to doing Seller Accountant. Tell me a little bit about your early days working with e-commerce brands. And was there a point where you realized you're good at helping online brands do what they do?
Yeah, so I was kind of an eBay nerd even in college 20 years ago, and built a guitar, like buying the parts myself. And so I've been really fascinated with e-commerce from the beginning. But my first entrepreneurial venture was a healthcare company. We were in a really different space, lots of human resources, lots of people, lots of bodies. Yep. And I was grateful to get to exit that business. What I wanted to do is I wanted to coach CEOs. I really am passionate about this idea of helping a small to medium-sized business compete in this marketplace with juggernauts. There's such a skew of power towards a Shopify, Amazon, Target, Walmart kind of brand set. And so what I realized is this entrepreneur needs a higher level of financial intelligence in order to compete in the sandbox they're choosing to compete in. And I saw there being an opportunity there for myself. So to answer your question, I happen to be an accountant. My MBA focus is in finance, but to be honest with you, my superpower is speaking entrepreneur with complex number things, right? And so yes. I'm grateful that I have a team that does good on the bookkeeping. We do a pretty good CFO service, but at the end of the day, it's how do I, as a $5 million brand, operate successfully in a sandbox that has $500 million funds competing with me. And so that's what kind of gets me jazzed.
Have you realized was there a client or a client situation where you said, yeah, I'm in the role. I've got what I need here to do this full time. This is fun. Was there a moment that happened for you, or a series of moments?
Yeah, so let me say that I was a little bit more ready, fire, aim, which you're like, what? An accountant that's ready, fire, aim. But I exited the one business, took my family camping, retired for 3 days, and have a buddy of mine that owns a large, was the founder of a large software company called Seller Labs that services Amazon sellers. And I was just talking to him. He's like, there are other problems that these guys have. And I just was like, yes, that's exactly what it is. I just spent, during the CEO transition from me to the new leadership team, I was the de facto bookkeeper for this firm that I was exiting in QuickBooks Online. I was like, oh, my controller, like her job's really important. That's kind of cool. And so to be honest with you, I think you're giving me too much credit. I think what I did was I said, I'm going to dive in full force. My first 3 phone calls were to the 3 largest competitors in the space and just said, hey guys, I love what you're doing. I'm going to be respectfully trying to create a model that really focuses more on the intelligence and financial coaching side of this business. And we're going to solve a bookkeeping headache. And so that's kind of what we did. And I think about 2 months in, I was validated. It took me 2 months to find someone to pay me money. It's like, I'll shine your shoes, I'll do your laundry, like give me a little bit of money, right? But once we found a model that worked, we saw transformative impact on these small businesses very early on. We've had some companies that were able to go from 1 to 5 million to 20 million to 50 million in consecutive years here because of good decision making based on good financial data.
So you've hit on something that took me a while to realize, but the accountant that works with a small business is not necessarily the accountant that works with an e-commerce small business. And the vernacular and the types of things that need to be looked at in the e-commerce space versus your traditional accountant who's just helping with doing inventory counts on the shelves. Tell me a little bit about what sellers should be looking for when they're looking for an accountant that specifically has e-commerce capabilities and e-commerce insights.
Yeah, so there's two sides. I mean, first of all, you need a good CPA that understands how to file your taxes based on all the business interest and income that you have as a family. And in my mind, it's going to be hard for that CPA to be baked into an industry specific model like seller account. That's just my opinion. That's the reason we don't offer tax services. It's because I think you should have somebody that understands your real estate portfolio and your husband's pharmacy job or whatever it is that's happening in your family.
Sure.
But most of those same CPAs that are great at making your tax stuff work every year absolutely hate e-commerce, don't have any idea how to help you with inventory related issues, sales tax issues, multi-channel issues. And so I think as you're looking for your controller wing or your bookkeeping wing, it's important to come across somebody who understands how to deal with those Amazon flat files. I mean, that's really funny. I look at those now, I'm like, well, that's pretty easy. Take that Amazon flat file and I can give you a due diligence run on any number of months. That's not easy. That's a disgusting data set. And most accountants in the world would avoid it with a 30-foot pole if they could. And so finding someone who, the more complex the accounting, the more important it is to have somebody that does it all day, every day, and understands the quirks of it. And obviously the inventory part of it, costing is so critical. You can have such an easy false positive. I think I'm making money, only to realize I didn't capture my cost of goods sold correctly. And I was losing money after advertising. That's a sickening feeling for an entrepreneur. And so that's why you can't afford to go with the kind of, easiest, just cash basis. Let's just figure it out later. You really have to have good accounting. And I am unaware of any major CPA firms that are great at e-commerce accounting. And so I'm grateful for it. It's a spot where we can step in.
Oh yeah, absolutely. So. Absolutely. Tyler, I want to thank you for joining us today on the BuyBox Experts podcast. For those of you who are interested in learning more about Seller Accountant, please visit selleraccountant.com. And now to finish today's podcast, I'd like to share some final thoughts. For third-party sellers to be successful on Amazon, a critical lever will be soliciting feedback from customers. We at BuyBox Experts are really big fans of the team at Ecom Engine and its tools that help Amazon sellers to simplify the process of messaging customers of Amazon orders. To learn more, go to ecomengine.com. And with that, I want to thank you for listening today, and I look forward to joining you next time on the BuyBox Experts podcast.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.